Sorry for the discrepancy there. So coming back to the question, it was how much footfall they are expecting for a full year from Odisha Park. So the management said it is around 3 to 4 lakhs, whereas as of now in first half they have done 1 lakh, and it's like two times more they'll have to get in next 6 months. So basically they are also saying that it's very unpredictable in the initial first year of operation, but still they'll stick to that 3 to 4 year visitor mark. And like they are because it's a new place which they are doing for the first time. So they have to give some discounts, promotions, and all those things. Marketing spends will be there, which are varying. And ARPU also they are pretty strong. Like what they saw about people spending in Odisha Park is more than what they had expected. So they are saying that they should be able to meet the targets. So then QIP question once again. So the board has approved. So and they have not done in the last 6 to 7 years any QIP. So what was the reason for this? So they said that the weather, like I mean the environment right now seems to be conducive. Like government is promoting the tourism policy, and people are also ready to spend. And parks, if so like let's say for example Odisha, they were very supportive and they created a single window for all the for setting up the park, whereas in Chennai there were some regulatory issues. So things like this are there. So they what they are saying is that the market will go from like 11,000 crores to like 25,000 crores in next 5 years. That means the adventurous park market. So they want to grab a big share of it, and every year they delay the construction of parks. They'll have to spend more money in future. So that's why they are like they're hitting the accelerator right now, and they're building more and more parks. So they're like, and in 16 months if they can do a park which will add 200 crores to their revenue, so that is like a good thing, and they want it to, they want that to happen. So yeah, this is why they are doing this QIP, and they're being very aggressive with the expansion plans. Then the question was like, will they be doing it in tier 1 park or tier 2 park? Like how are they planning to do it? So the management says like obviously tier 1 cities are more lucrative, but the investment is going to be higher. It's almost like 800,000 crores, whereas in tier 2 cities it will be like 700 crores, sorry, 200 crores. So that's why if they, that's why to keep a mix, they want to have a mix of both. And it again depends, like it's not in their control. Like whichever government gives the approval, they'll set up the park. So that's why it's very difficult for them to tell where they'll be setting up the parks now. And they also said that like right now they can build like three parks almost at the same time, like next to, I mean, simultaneously. Like before they could do only one park after another was finished, but now they can do almost three parks at the same time. So management says like two they can do easily, but three is little, is possible, but it's little on the like they would prefer not to, because they need 18 months at least, and they are building it on around 50 to 100 acre, and there are like 1,000 people who are employed every day for 18 months. So they need a very strong team, like, and technical expertise very much required. So they don't want to dilute that and build three parks or four parks at the same time. So two they can easily do is what they're saying. Then how was the Diwali and Dasara? I mean, so the manage then the company, then the analyst asked, like there was revenge spending after COVID, right after COVID, but now how is it? So the management agrees that after COVID, like last 2 years which they had like blockbuster years, like they had highest revenue of close to 500 crores every year for 2 years. So but now the people are like kind of coming back to normal. So now if they want to grow the revenue, they'll have to set up new parks. So that's where Odisha Park will come in. And they'll see, but on a longer term, like that's how their business is, what the management says. Like they'll have 2 years of very good growth, then 2 years of flattish growth, but in the long run, over 10 years period, they are giving compounded annual growth. So that's what they are saying. And yeah, people are ready to spend, and all those things are there. So that's why they want to tap it. So that's what the again question was, why sudden aggressiveness and all those things. And even government of India is supporting, and they're doing so approval and all will be easier to take. Who knows, like if the government changes and next government's policy will be different, then it will be different to difficult to set up parks. So that's why it's like conducive now, and they're doing it. Then like, so on margin side, someone is asking like, let's say And whenever a new park opens, because of the marketing spend, opening, inauguration ceremony, new people are added, there will be drop in margin. So now Bhubaneswar Park, as it settles down, Chennai Park will open and margins will drop. So like, what is the EBITDA that they are expecting? So the company says that 40% EBITDA was the average before COVID, and then during COVID, because there was such high footfall, the EBITDA increased to 50 to 55%. So they are saying that they can expect it to go to normalcy of like 40%, but with new parks opening, there could be slightly like 2% dip for some time. Then once the park matures, they can again, yeah, manage it. And they've also said that at corporate level, they've added around 130 people to manage the corporate level for all parks. So they are saying that whenever the new parks they want to add, they won't have to spend any more on corporate thing, which they spent like. Around some money they're spending on wages at corporate level, but now they're saying that the recruitment part is done. Now only parks need to be added, and there is no need to buy create hire more people for the corporate level. So that's why margin shrinkage will be not that much, but anyways they can see 2% margin shrinkage is what they have said. And also then one person asked if there are any locations which they have zeroed in on to for the next developing park. So the management says they have done about 4 to 5 locations, and out of that, Noida and Indore, they're mostly sure of doing parks there. So both Noida and Indore, so Indore will be tier 2, Noida will be somewhat like tier 1. So then one person asks if they'll do re-evaluation of land while before doing QIP, so that value of current valuation of company will increase. The management said they are not interested, like they don't want to do it because recently they did it and some 400 crores extra was recorded from Ind AS to Indian GAAP when they did. So that's why management is not keen on doing it. And then another person asked, like usually their parks, if they have 30 to 40% empty, matlab they have not put any sports or event, I mean set up any rides there. So what are they planning to do with that? Like, will they build more? So the management says that this is for long term view. Like, let's say once they have bought land, then building land adjacent to, I mean buying land adjacent to that is very difficult. That's why they bought it now. And like 30 to 40% overall it's empty. But as of now they don't have any plans, but they are doing capital expenditure. Like I said, they did 15 crore capital expenditure in Hyderabad. So like that they'll keep doing in parks as and when required. Then the one more person was making sure that, like, he was reiterating if company is still on lease model or would they want to be interested in buying the land. So the management said they'll prefer lease model because it will be less expensive, but if land is available for cheaper price, then they might as well buy it. So that's a smart thing to do. So yeah. And then one more person asked about the 24 crore money which they got for deferred tax. So the company has explained it in detail, where when they did from Ind GAAP to Ind AS, they had re-evaluated the land price. Because of that, there was 70 to 75 crore deferred tax which was sitting on their book. And then the long-term capital gains was reduced from 12.20% to 12.5%. So the benefit they got. And so there are 24 crore revision came from there. And then one more person asked if they are planning to build parks with the resort or without the resort. So Arun management said that they would prefer to build it with the resort, like adventure park, but not initially. Like first they want to set up only the park, then see its operation, see how people are coming, and see if there is scope for it, and only then think of consider developing resort, is what the management said. Then one more person asked, like, now ticketing and non-ticketing revenue share is 75 to 25. Like if a person spends 750 rupees for ticket, he will spend 250 rupees on food and beverages and merchandise inside. So this they want to take it to 60/40. And how are they planning to do it? So they say there are only two types, like food and beverage and merchandise. They want to bring more branded item into the facility, and also food and beverages to develop more variety of menu and other things. And another is like sell sell more and more as a package value as soon as they enter the park. So yeah, this is how they are planning to do it. And this was the con call for Wonderla. If you liked it, subscribe and comment down which company con call you want me to do next.